Hey, and welcome back to another video here at Fiscal Voyage. My name is Felix. In this video, we're going to talk about a previous video that I made on Facebook stock. Facebook at the time was about $260, and I made it as a buy, and we'll go into that later in this video. And currently, the stock is up about 4 or 5%. It had a pop today, and we're going to determine if Facebook stock, even after this pop and this little run up, is it still a good buy at current prices. And also, you could check out my previous video on Facebook. Here's the link there, so make sure to check that out as I go more in that video, a deep dive on the Facebook fundamentals. And if you're new to the channel, make sure to hit that subscribe button for more videos like this, as well as check out my free ebook in the description below. Alright, so here's my last video on Facebook stock. At that time, Facebook was about $260 a share in September 17. You can see here, and it was undervalued. The fair price was about $298, and it was undervalued at that day about 14.6%. I did give it a buy recommendation, of course, because of the fundamentals. You can see here we go back 48% increase in a 10-year period annually. Revenue growth, net income growth is high, operating income high growth as well, and analysts were, the earnings for the company was really good. PEG ratio was very low versus a 5-year. Price to sell was low versus a 5-year. So we're going to do an update on this last video I made on September 7th, and since then, September 7th, since then you can see here the company ended up the day lower than that at 254. But it has since came up about 10%, and it's actually up around 4% or 5% to date at $280. So it looks still to be undervalued based on my fair price from the last video, but not as better price than it was in September 17. So we're going to look at some of the fundamentals again, not going in detail. For more detail, go back to that old video. But let's look at some of the fast graph and Morningstar of Facebook stock. So first off, let's look at Yahoo reporting here. Facebook, as you can see, up 4.69%. Analysts are expecting $8.05 average in earnings for this year and $10.19 for 2021. So that's positive news there. Sales growth, as you can see here, is when analysts are expecting for the fourth quarter up 14%, for the year up 13.5%, and for next year about 24%. Of course, because of the economic shutdown and stuff, a lot of advertising stopped for Facebook. So that's positive news there, that they're expecting about 24% growth for fiscal year 2021. And for the next 5-year, earnings are expected to grow about 20.2% or 20% for the next 5 years. So that's very positive. And you can see here, average estimate for the price is $291.55, currently at $280.11. And if we go to Morningstar, Morningstar is given a fair price for Facebook at about 3 stars, which is a hold rating. You can see here last closing price at $267, and you saw is at $280 right now. So if we go back, fair price at $265, so it looks to be overvalued based on the Morningstar expectations. You can see here 3-year growth rate at 36.76% for the past 3 years. Net income tremendous, 21%, 22%. Operating margin at 37, which is really good. If we look at the debt to equity ratio, the company is extremely low in debt, so that's very great. They have a great balance sheet, current ratio of 6 outstanding. So we look at some of the valuation here. The current price to sell is still lower than the 5-year, so that's positive news. Price to earnings is lower than the 5 years, so that's also positive there. PEG is still low, it's getting to their 5-year average, but it's still decent compared to their 5-year average. Enterprise value over earnings before interest and amortization and taxes is lower for both EBITDA and EBIT. So that's positive as well there. So we look at the fast graph, you can see here analysts are expecting about 25% growth from the previous year. You can see this year is expected to grow about 26%, next year 27%, and 2022 22%. So this is in line with Yahoo's, which uses rotors, and FastGraphs uses fact sets. But overall, you can see if the company trades at a normal multiple about 31 or 32 PE, you could have a nice total annual return about 20%. Again, this is from yesterday's closing price. So this total annual return is going to be slightly lower because currently the company is going for 280. So this is from yesterday's closing price. But still, it presents a decent buying opportunity, not as good as it was from that last video on September 17th. And actually a few days before after that, because it went a little lower since that video, but it's picked up nicely. It's up 10% since that video. But overall, you can see it does present a decent buying opportunity. I wouldn't say outstanding or great or good, just a decent buying opportunity. I wouldn't go all in right now, but it does have a nice potential for some decent return. You can see here long-term debt to cap ratio about 8%, so that's really good. If we look at the forecasting and analyst scorecard first, you can see here Facebook beats analysts 86% of the time in the 1-year forecast, and the 2-year forecast 67% of the time, and they hit it about 17% of the time. So it's most likely based on that analysts are not very accurate in predicting these forecasts, but it shows that if we go back to estimates, you can see here for 2020, they had a lower forecast. At 6 months ago, it was $7.33. 3 months ago, it was $7.35 on earnings, and now $8.08. So this has been increasing. So that's very positive news. That's what's been driving the price higher. I still see it increasing as the New Year's come with Christmas, and people, the advertising pushing hard to kind of make their money back from the loss earlier this year. So I could definitely see this growing higher. This is why I would say Facebook is a buy. It's an okay buy. It's not a great buy as it was when I made that last video and the days after that video. But overall, it's a decent buy at current prices. So there you have it. Those are my thoughts on Facebook currently. It's a decent buy, not a great buy like it was before. As you saw in the few clips in this video of how the revenue growth, the net income growth, earnings growth, and analysts are expecting about 20% growth going forward as well for earnings. So that's real positive. And you could go back again to check out more in detail the fundamentals on Facebook in my previous video. So again, as the year goes towards the Christmas time and a lot of people start to buy and have more confidence in the corona issue, people would start, the company would start spending more money in ads as we get closer to the Christmas time. So that should definitely drive revenue and earnings for Facebook to go higher because more companies are going to be spending more money in ads. And the best part about Facebook stock is this low debt to equity ratio and the long-term debt to cap ratio as well at 8%. Overall, great business, and is going to continue to grow as the time goes. So overall, I think Facebook is a decent buy at current prices. It may go drop lower because of some news or whatnot, but definitely a decent buy now. But again, if you're new to the channel, make sure you hit that subscribe button. And if you enjoyed this video, hit that like button for the YouTube algorithm. And I'll see you guys in the next one.